Hello dear traders, I'm Anna Kasatkina. You're watching Daily Financial News on Insta TV. The Canadian dollar advanced against its US counterpart on Wednesday following the Bank of Canada's interest rate announcement. Earlier, the loonie was facing heavy pressure from the greenback. The once strong American currency was having a tough time yesterday. The situation became even worse after the release of worse than expected macroeconomic data from the United States. The US building permits report was the only ray of light for dollar bulls in Wednesday's trading session. The indicator beat the forecast, even though it still printed a drop of 3.9% in December compared to the prior month. Following the rate-setting decision announced by the Bank of Canada as well as the latest US housing and inflation figures, the greenback versus loonie pair retreated from 1.4527 levels, landing at 1.4458. Today, the US dollar pared some losses and started to regain ground. Currently, the pair is trading around 1.4512. The US currency lost its appeal for several reasons. Apart from soft US statistics, the dramatic spikes and troughs in crude prices seen recently amid the ongoing turmoil in the global oil market are all weighing down on the greenback. Besides, the US dollar showed clear signs of weakness versus its Canadian peer after the Bank of Canada's move to hold its key interest rates steady. Canadian monetary policymakers maintained interest rates at 0.5% in line with market estimates. Still, some analysts had assumed that the central bank would be forced to slash its benchmark rate by 25 basis points, down to 0.25% due to the renewed slump in oil prices. In 2015, the Bank of Canada implemented 2 interest rate cuts in an attempt to offset the impact of cheaper oil on the country's economy. The regulator warned that the economic environment in Canada remains highly uncertain. Crude prices extend losses, posing a considerable threat to the domestic economy. The Bank of Canada downgraded its forecast for the country's economic growth, saying that the economy will close the output gap and resume operating at full capacity no sooner than late 2017. Another batch of crucial Canadian data is slated for release tomorrow. Financial markets are betting on sluggish economic growth. Only time will tell whether the actual figures match the expectations. Until then, keep track of the latest developments in the financial world by watching InstaForexx TV. See you. Bye.